Introduction to house flipping. House flipping involves purchasing a property, typically below market value, renovating it, and then reselling it quickly for a profit. This strategy requires a keen understanding of real estate markets, construction costs, and buyer demand. Successful flippers meticulously plan each step, from acquisition to sale, to maximize their return on investment. It is a dynamic process that combines financial acumen with practical project management skills. Understanding the core principles is crucial before delving into specialized markets. This initial phase sets the foundation for all subsequent learning modules. It emphasizes the cyclical nature of buying, improving, and selling properties. While potentially lucrative, house flipping carries inherent risks, including unexpected repair costs, market downturns, and prolonged selling periods. Rewards, however, can be substantial, offering significant capital gains and the satisfaction of transforming properties. A thorough risk assessment and contingency planning are essential for mitigating potential losses. Investors must weigh these factors carefully, considering their financial capacity and tolerance for uncertainty. The goal is to achieve a favorable risk-reward balance through informed decision-making. This course aims to equip you with the tools to navigate these challenges effectively. Understanding underserved markets. Underserved markets are typically areas with lower average incomes, limited access to resources, and often a history of neglect or disinvestment. These markets present unique challenges, but also significant opportunities for investors willing to engage thoughtfully. Properties in these areas may be undervalued, offering higher potential for appreciation after renovation. Understanding the socio-economic fabric of these communities is paramount for successful and ethical investment. It requires a different approach than flipping in affluent neighborhoods. Investors must look beyond superficial appearances to see the inherent value. Key characteristics of underserved markets include aging housing stock, lower property values, and a potential for community revitalization. These areas often benefit from local government initiatives aimed at economic development and housing improvement. Identifying markets with positive trends, such as increasing employment rates or new infrastructure projects, is crucial. Such indicators suggest a ripe environment for property value growth and increased buyer demand. A deep dive into local policies and community plans can reveal hidden potential. This strategic analysis helps in making informed investment decisions. Market research and analysis. Effective market research is the cornerstone of successful house flipping in underserved markets. It involves analyzing local economic data, population trends, and housing inventory. Investors should look for areas with stable or growing employment, improving school districts, and declining crime rates. These factors contribute to increased demand and property value appreciation. Utilizing various data sources, including government statistics and local real estate reports, is essential. This data-driven approach minimizes speculative risk. Understanding market dynamics helps identify the best investment opportunities. Identifying suitable neighborhoods requires a granular approach, focusing on specific blocks or micro-markets within a larger underserved area. Demographic analysis, including income levels, household composition, and age distribution, helps tailor renovation strategies to potential buyers. Understanding local amenities, such as parks, public transport, and community centers, also plays a significant role. These amenities enhance a property's appeal and contribute to its resale value. A deep understanding of the local community's needs and preferences is crucial for successful project planning. Legal and ethical considerations. Navigating legal and ethical considerations is paramount when flipping houses in underserved markets. Adherence to fair housing laws, such as the Fair Housing Act, is non-negotiable, ensuring equal opportunity for all buyers, regardless of race, religion, or other protected characteristics. Understanding local zoning ordinances, building codes, and property disclosure requirements is also critical. Non-compliance can lead to significant legal penalties and reputational damage. It is essential to consult with legal professionals specializing in real estate. This proactive approach safeguards against potential liabilities and ensures legitimate operations. Ethical considerations extend beyond legal compliance to encompass the impact on the community. Responsible flipping aims to improve neighborhoods without contributing to gentrification that displaces long-term residents. Engaging with community leaders and understanding local needs can foster positive relationships and ensure renovations align with the neighborhood's character. Transparency in dealings and fair pricing practices build trust and contribute to sustainable community development. A commitment to ethical practices enhances both the project's success and the investor's standing. This approach prioritizes long-term community well-being over short-term gains. Financing strategies for flips. Securing appropriate financing is a critical step in house flipping, especially in underserved markets where traditional bank loans might be harder to obtain. Hard money loans are a common option, offering quick access to capital based primarily on the property's after-repair value, ARV, rather than the borrower's credit score. These loans typically have higher interest rates and shorter repayment terms, making them suitable for fast turnaround projects. Understanding the terms and conditions of hard money lenders is crucial. It ensures that the financing aligns with the project timeline and budget. Careful calculation of all costs is essential. Private lenders, including individuals or investment groups, represent another flexible financing source. These relationships are often built on trust and can offer more negotiable terms than institutional lenders. Networking within the real estate investor community is key to finding reliable private lenders. Equity partnerships, where investors pool resources, can also be effective for larger projects or those requiring more capital. Diversifying financing sources can provide greater flexibility and reduce reliance on a single funding channel. Always ensure all agreements are legally sound and transparent. This strategic approach to funding can significantly impact project viability. Property acquisition strategies. Finding distressed properties in underserved markets requires proactive and often unconventional strategies. Sources include foreclosures, short sales, probate sales, and properties with code violations. Networking with local real estate agents, wholesalers, and property managers who specialize in these areas is invaluable. Driving the dollars, where investors actively search for neglected properties, can also yield off-market deals. Building relationships with local community members can also provide leads. The key is to identify properties before they hit the open market, reducing competition. This approach often leads to better purchase prices. Negotiation tactics are crucial for securing properties at a price that allows for a profitable flip. Understanding the seller's motivation, whether it's financial distress or a desire for a quick sale, can inform your approach. Presenting a clear, concise offer that addresses their needs can be more effective than simply offering the lowest price. Being prepared to close quickly and offering cash deals can also provide a competitive edge. Flexibility and creativity in structuring deals are highly beneficial. Always ensure the negotiated price leaves sufficient room for renovation costs and profit margins. This strategic negotiation is vital for project viability. Due diligence and inspections. Thorough due diligence and property inspections are non-negotiable steps before purchasing a flip property. This process involves a detailed assessment of the property's physical condition, identifying any structural issues, major repairs needed, and potential environmental hazards. Hiring licensed inspectors for electrical, plumbing, HVAC, and structural evaluations is crucial. Their reports provide an objective overview of the property's true condition. This comprehensive evaluation helps in accurately estimating renovation costs and avoiding costly surprises. Never skip this vital step, as it forms the basis of your financial projections. Beyond physical inspections, due diligence includes researching property titles, liens, and any outstanding taxes or permits. A title search ensures clear ownership and identifies any encumbrances that could affect the sale. Reviewing past permits and property records can reveal previous renovation work or unresolved issues. Understanding local zoning and land use regulations is also essential to confirm the property's potential use. This meticulous research protects your investment and prevents future legal complications. It is a critical component of risk management. Every detail must be scrutinized to ensure a smooth transaction. Rehabilitation planning and budgeting. Effective rehabilitation planning is crucial for controlling costs and maximizing profit in house flipping. This involves creating a detailed scope of work that outlines every repair and upgrade, from minor cosmetic changes to major structural renovations. Prioritize improvements that offer the highest return on investment, ROI, and appeal to the target buyer demographic in underserved markets. Focus on essential repairs first, such as roofing, plumbing, and electrical systems, before moving to aesthetic enhancements. A well-defined plan prevents scope creep and keeps the project on track. This systematic approach is vital for efficient project execution. Budgeting for renovations must be meticulous, accounting for all material costs, labor, permits, and a contingency fund of at least 10 to 15% for unexpected issues. Obtain multiple bids from contractors and suppliers to ensure competitive pricing. Track all expenses rigorously throughout the project to stay within budget. Value engineering, which involves finding cost-effective alternatives without compromising quality, can significantly impact profitability. A detailed budget acts as a roadmap, guiding financial decisions and ensuring fiscal discipline. This financial foresight is key to a successful flip. Every dollar spent must contribute to the property's value. Permits and regulations compliance. Navigating local permits and regulations is an essential, albeit often complex, aspect of house flipping. Before any significant renovation work begins, it is crucial to understand and obtain all necessary building permits from the local municipality. These permits ensure that construction adheres to safety standards and zoning laws. Failure to secure proper permits can lead to fines, project delays, and even the forced demolition of unapproved work. Researching the specific requirements for your project and jurisdiction is a critical first step. This proactive approach prevents costly, legal, and logistical setbacks. The permit application process typically involves submitting detailed plans, drawings, and sometimes engineering reports to the local building department. Be prepared for potential inspections at various stages of construction to ensure compliance with codes. Understanding the difference between minor repairs that may not require permits and major structural changes that always do is vital. Building a good relationship with local building officials can also facilitate a smoother process. Staying informed about any changes in local regulations is also important. This diligent approach ensures your project is legally sound and structurally safe. Contractor selection and management. Selecting the right contractors is paramount for the success of a house flip, especially in underserved markets where reliable professionals might be harder to find. Seek out licensed, insured, and experienced contractors with a proven track record in similar projects. Obtain multiple bids and thoroughly vet references, including visiting previous job sites if possible. A clear, written contract outlining the scope of work, timeline, payment schedule, and warranty information is essential. This due diligence ensures quality workmanship and protects your investment. Never compromise on the vetting process, as a bad contractor can derail your entire project. Effective contractor management involves clear communication, regular site visits, and prompt payment for completed work. Establish a realistic project timeline and hold regular meetings to track progress and address any issues promptly. Be prepared to make quick decisions to keep the project moving forward, but always ensure changes are documented and approved. Maintaining a professional yet firm relationship with your contractors fosters a productive working environment. This hands-on approach minimizes delays and ensures the renovation stays on schedule and within budget. Good management is key to a smooth and efficient renovation process. Design and staging for resale. Strategic design and staging are crucial for maximizing a flipped home's appeal and resale value, especially in underserved markets. The goal is to create a broad appeal that resonates with the target buyer demographic, often first-time homeowners or young families. Opt for neutral color palettes, durable finishes, and functional layouts that enhance perceived space. Focus on key areas like kitchens and bathrooms, as these often yield the highest ROI. Thoughtful design can significantly reduce time on the market. It transforms a house into a desirable home, attracting a wider pool of potential buyers. Staging a flipped home involves furnishing and decorating it to showcase its full potential and help buyers visualize themselves living there. Even a few key pieces of furniture and tasteful decor can make a significant difference. Highlight the property's best features and create a warm, inviting atmosphere. In underserved markets, staging can be particularly effective in demonstrating how a renovated home can elevate living standards. Professional photography of the staged home is also essential for online listings. This visual presentation is critical for making a strong first impression and driving buyer interest. Cost control and value engineering. Effective cost control is fundamental to profitability in house flipping. It involves continuously monitoring expenses against the budget and identifying areas for potential savings without compromising quality. Regular review of invoices, comparison with initial estimates, and negotiation with suppliers are ongoing tasks. Implementing strict inventory management for materials helps prevent waste and theft. Any deviation from the budget should be promptly investigated and addressed. This vigilant approach ensures that every dollar spent contributes effectively to the property's value. Maintaining financial discipline is crucial for maximizing returns. Value engineering is a systematic approach to optimizing the cost-effectiveness of a project, while maintaining or improving its functionality and quality. This involves exploring alternative materials, construction methods, or design choices that offer similar benefits at a lower cost. For example, choosing durable, attractive, yet more affordable flooring options can significantly reduce expenses without sacrificing appeal. Collaborating with contractors and suppliers to identify these opportunities is key. The goal is to achieve the desired outcome with the most efficient use of resources. This strategic thinking directly impacts the project's profit margin. Marketing and sales strategies. Effective marketing and sales strategies are crucial for a quick and profitable exit from a flipped property. Pricing the home correctly is paramount. It must reflect the market value, the quality of renovations, and the specific dynamics of the underserved market. Overpricing can lead to prolonged market time, while underpricing leaves money on the table. Conduct a thorough comparative market analysis, CMA, to determine an optimal listing price. This data-driven approach ensures competitive positioning. Understanding local buyer sentiment and recent sales in the area is also vital for accurate pricing. High-quality listing techniques are essential for attracting potential buyers. This includes professional photography, virtual tours, and compelling property descriptions that highlight key features and benefits. Leverage online real estate platforms, social media, and local community channels to maximize exposure. Open houses and private showings should be well organized and inviting. Emphasize the value proposition, such as modern amenities, move-in readiness, and the potential for neighborhood growth. A strong marketing presence generates interest and facilitates a faster sale. This comprehensive approach ensures the property reaches the widest possible audience. Working with real estate agents, collaborating with experienced real estate agents is highly beneficial for flipping houses, particularly in underserved markets. Seek out agents who specialize in investment properties and have a deep understanding of the local market dynamics. An investor-friendly agent can provide valuable insights into neighborhood trends, comparable sales, and potential buyer demographics. They can also help identify off-market deals and navigate complex negotiations. Building a strong, trusting relationship with an agent can significantly streamline the buying and selling process. Their expertise is invaluable for both acquisition and disposition. When working with agents, clearly define expectations regarding communication, marketing efforts, and commission structures. Negotiate commission rates up front, especially if you plan to do multiple deals with the same agent. A good agent will actively market your property, schedule showings, and handle all the necessary paperwork, freeing up your time to focus on other projects. They act as a crucial intermediary, bridging the gap between sellers and buyers. Their network and market access can be instrumental in achieving a quick and profitable sale. This partnership is a key component of a successful flipping operation. Closing the deal process. Closing the deal is the final critical stage of a house flip, where ownership of the property officially transfers from seller to buyer. This process involves a significant amount of legal paperwork, including the purchase agreement, deed, and various disclosure forms. Understanding all closing costs is essential, as these can include title insurance, escrow fees, transfer taxes, and agent commissions. These costs can significantly impact your net profit, so they must be factored into your initial financial projections. A clear understanding of these expenses prevents last-minute surprises. It ensures a smooth and transparent transaction for all parties involved. Working closely with a reputable title company or real estate attorney is crucial to ensure a smooth closing. They will handle the legal transfer of funds, record the deed, and ensure all documents are properly executed. Be prepared for a closing meeting, where all parties sign the necessary paperwork. Review all documents carefully before signing, and ask questions if anything is unclear. A successful closing signifies the completion of your flipping project and the realization of your profit. This final step requires meticulous attention to detail and legal compliance. It marks the culmination of all your efforts. Post-sale analysis and learning. After successfully closing a deal, conducting a thorough post-sale analysis is crucial for continuous improvement in your flipping business. Review the entire project, from acquisition to sale, to identify what went well and what could have been done better. Analyze the actual costs against the budgeted costs, the actual timeline against the planned timeline, and the final profit against initial projections. This detailed review provides invaluable insights into your processes and decision-making. It helps refine your strategies for future projects. Every flip, successful or not, offers a learning opportunity. Documenting lessons learned from each project is essential for building a robust flipping methodology. Create a comprehensive report that includes all financial data, contractor performance feedback, market insights, and any unexpected challenges encountered. This institutional knowledge becomes a valuable asset, informing future investment decisions and operational improvements. Share these insights with your team to foster collective learning and enhance overall efficiency. The goal is to continuously optimize your approach to house flipping in underserved markets. This iterative process drives long-term success and profitability. Building a strong flipping team. Building a reliable and skilled team is fundamental to scaling your house flipping operations, especially in diverse markets. Your core team should include a trusted real estate agent, a reliable contractor, a knowledgeable real estate attorney, and a proficient title company. Beyond these, consider adding a skilled handyman, an experienced accountant, and potentially a mortgage broker specializing in investor loans. Each team member brings specialized expertise that contributes to the efficiency and success of your projects. A strong team mitigates risks and enhances operational capabilities. It is an investment in your business's future. Networking within the real estate investor community is crucial for identifying and vetting potential team members. Attend local real estate meetups, industry conferences, and online forums to connect with professionals. Always conduct thorough due diligence on potential team members, checking references, licenses, and past project performance. Clear communication and defined roles are essential for effective teamwork. A cohesive team can navigate challenges more effectively and execute projects more smoothly. Investing time in building these relationships pays dividends in the long run. A collaborative environment fosters shared success and mutual growth. Risk management strategies. Implementing robust risk management strategies is paramount for protecting your investment in house flipping, particularly in volatile, underserved markets. Identify potential risks early, such as unexpected repair costs, market downturns, or delays in permitting. Develop contingency plans for each identified risk, including allocating a dedicated contingency fund in your budget. Diversifying your investments across different neighborhoods or property types can also spread risk. Continuous market monitoring helps anticipate changes and adjust strategies accordingly. Proactive risk assessment minimizes financial exposure and increases project stability. It is about preparing for the unexpected. Mitigating financial risks involves careful budgeting, securing appropriate insurance, and having multiple exit strategies. Property insurance is essential to cover potential damages during renovation. Consider title insurance to protect against unforeseen ownership claims. Maintain a healthy cash reserve to cover carrying costs if the property takes longer to sell than anticipated. Exploring alternative exit strategies, such as renting the property or offering owner financing, can provide flexibility if a quick sale isn't feasible. These measures provide a safety net, safeguarding your capital against unforeseen circumstances. A comprehensive risk management plan is your best defense. Community engagement best practices. Engaging with the local community is a best practice for ethical and sustainable house flipping in underserved markets. Building positive relationships with residents, community leaders, and local organizations can provide invaluable insights into neighborhood needs and preferences. Attend community meetings, introduce yourself, and clearly communicate your intentions for property improvement. Transparency and respectful dialogue foster trust and can lead support for your projects. This approach ensures your renovations align with the community's vision, avoiding potential conflicts. It transforms a business transaction into a collaborative effort. Beyond communication, consider ways your project can positively impact the community. This could involve hiring local labor, sourcing materials from local businesses, or contributing to community initiatives. Responsible development aims to enhance the neighborhood's quality of life without contributing to displacement or gentrification. A reputation as a community-minded investor can lead to future opportunities and goodwill. Prioritizing the well-being of the community alongside profit creates a sustainable business model, This holistic approach benefits both the investor and the residents. It is about creating shared value and fostering long-term growth. Scaling your flipping business. Scaling a house flipping business involves expanding operations to undertake multiple projects simultaneously, or larger, more complex renovations. This requires developing robust systems and processes for every stage of the flip, from property sourcing to sales. Standardized checklists, project management software, and clear communication protocols become essential. Building a larger, more specialized team, including project managers and administrative staff, is also critical. Scaling effectively means replicating success consistently across various projects. It moves beyond individual deals to a more structured, enterprise-level approach. This systematic growth ensures efficiency and profitability. To scale successfully, focus on refining your acquisition channels and securing consistent access to capital. Develop strong relationships with multiple hard money lenders or private investors to ensure funding for multiple projects. Explore opportunities for bulk purchases of distressed properties or portfolio acquisitions. Automate administrative tasks where possible to free up time for strategic decision-making. Continuous learning and adaptation to market changes are also vital for sustainable growth. Scaling is not just about doing more deals, but about doing them smarter and more efficiently. This strategic expansion requires careful planning and execution. Exit strategies beyond resale. While direct resale is the primary exit strategy for house flipping, exploring alternative options can provide flexibility and additional revenue streams, especially in challenging markets. Converting a flipped property into a rental can generate consistent passive income, offering long-term wealth-building opportunities. This strategy requires a shift in focus from quick profit to tenant management and property maintenance. Evaluate the rental market demand and potential rental income before committing to this approach. It can be a viable option when the sales market is slow or when long-term investment goals align. This diversification can stabilize your portfolio. Owner financing, where you act as the bank and provide a loan to the buyer, is another alternative exit strategy. This can attract buyers who may not qualify for traditional mortgages, expanding your potential buyer pool in underserved markets. It can also allow you to sell at a higher price and generate interest income over time. However, it involves taking on the risk of buyer default and requires careful legal structuring. Lease option agreements, where a tenant has the option to purchase the property later, offer another flexible path. These alternative strategies require careful consideration of their unique risks and rewards. Tax implications of flipping. Understanding the tax implications of house flipping is crucial for accurately calculating your net profit and ensuring compliance with tax laws. Profits from flipping are generally considered ordinary income if the property is held for less than 1 year, subjecting them to higher tax rates. If held for more than 1 year, profits may qualify as long-term capital gains, which are taxed at a lower rate. This distinction significantly impacts your after-tax earnings. It is vital to consult with a tax professional to understand how these rules apply to your specific situation. Proper tax planning can optimize your profitability. Various expenses incurred during the flipping process can be tax-deductible, reducing your taxable income. These include acquisition costs, renovation expenses, carrying costs like utilities and insurance during renovation, marketing fees, and real estate agent commissions. Keeping meticulous records of all income and expenses is essential for accurate tax reporting. Understanding depreciation for rental properties, if you choose that exit strategy, is also important. Proactive tax planning and professional advice can help minimize your tax burden and maximize your overall returns. This financial foresight is a key component of successful flipping. Technology in real estate flipping. Leveraging technology can significantly enhance efficiency and decision-making in house flipping, particularly in underserved markets where data access might be fragmented. Utilize real estate data platforms and analytics tools to conduct market research, identify distressed properties, and analyze comparable sales more effectively. These tools can provide insights into neighborhood demographics, property values, and investment potential. Geographic Information Systems (GIS) can help visualize market trends and identify emerging hotspots. Technology streamlines the initial research phase, saving time and improving accuracy. It transforms raw data into actionable intelligence, providing a competitive edge. Project management software and communication tools are invaluable for overseeing renovations and managing your team. These platforms allow for centralized tracking of tasks, budgets, timelines, and contractor communications. Cloud-based document sharing ensures all team members have access to the latest plans and reports. Virtual reality, VR, or augmented reality, AR, tools can even help visualize design changes before construction begins, reducing costly errors. Embracing technology optimizes operational efficiency and enhances collaboration. It empowers investors to manage complex projects with greater control and transparency. Long-term wealth building, house flipping, when executed strategically, can be a powerful catalyst for long-term wealth building, extending beyond immediate profits. Reinvesting profits from successful flips into new projects allows for compounding growth, accelerating your portfolio expansion. Consider diversifying your real estate investments, perhaps by transitioning some flipped properties into long-term rentals to generate passive income. This creates a stable foundation for sustained financial growth. The goal is to build a robust real estate portfolio that generates both capital appreciation and consistent cash flow. It is a journey from transactional gains to enduring financial security. Developing a long-term vision for your real estate investments involves setting clear financial goals and continuously educating yourself on market trends and investment strategies. Explore opportunities beyond single-family homes, such as multifamily units or commercial properties, as your capital grows. Building a strong network of mentors and advisors can provide guidance and open doors to new opportunities. Consistent execution, combined with strategic planning, transforms flipping from a series of individual transactions into a sustainable wealth creation engine. This holistic approach ensures your efforts contribute to lasting financial independence. It is about creating a legacy through smart real estate decisions. Case studies, successes and failures. Analyzing real-world case studies of house flips, both successful and unsuccessful, provides invaluable practical insights. Examine successful projects to understand the factors that contributed to their profitability, such as astute market timing, effective renovation strategies, or strong negotiation skills. Pay close attention to the initial property selection, the budget adherence, and the marketing approach. These examples offer tangible blueprints for replication. Learning from others' triumphs reinforces best practices and inspires confidence. It provides a deeper understanding of what works in specific market conditions. Equally important is studying failed projects to identify common pitfalls and learn how to avoid them. Analyze instances of budget overruns, prolonged selling periods, or unexpected structural issues. Understand how poor due diligence, contractor mismanagement, or misjudged market demand led to losses. These cautionary tales highlight the importance of risk management and contingency planning. Learning from failures, whether your own or others, is a powerful way to refine your strategies and minimize future mistakes. It transforms setbacks into valuable educational experiences, strengthening your resilience and decision-making. Future trends in underserved markets. Staying abreast of future trends is crucial for long-term success in flipping houses in underserved markets. Watch for shifts in urban planning, such as new public transportation routes, community development grants, or rezoning initiatives. These changes can significantly impact property values and buyer demand. Emerging technologies, like smart home features or sustainable building materials, are also becoming increasingly important. Adapting your renovation strategies to incorporate these trends can enhance a property's appeal and future-proof your investments. Proactive trend analysis provides a competitive advantage. It allows you to anticipate market evolution rather than merely reacting to it. Sustainable development practices are gaining prominence, even in underserved markets, driven by environmental consciousness and long-term cost savings. Incorporating energy-efficient appliances, improved insulation, and water-saving fixtures can attract environmentally conscious buyers and reduce utility costs for future homeowners. Additionally, understanding demographic shifts, such as an influx of younger generations or specific ethnic groups, helps tailor your designs and marketing efforts. These forward-looking strategies not only contribute to community well-being, but also enhance the profitability and marketability of your flipped properties. It is about investing in the future of both the property and the community.